We have had one of the longest bull runs from 2009. Do you agree? Welcome to subramani.com. Please click on the bell icon and subscribe to the YouTube channel. My pleasure having more people here. Whenever I look at my portfolio, I know some of the shares are terribly overvalued and I need to do something about it. So I know I will start acting if I look at it for more than 5 minutes. So I don't look at it for more than 5 minutes. Which are the shares which are terribly overpriced? There is Nestle, there is Colgate, and maybe there is HUL. There is HDFC Mutual Fund, and I do think all these shares look terribly overpriced at various points in time. But when I looked at something like Gillette, and I looked at Gillette of 1997, 98, and I saw I was getting about 15-16% return plus a solid 2% dividend on my original cost. I was getting about 4%, 5%, or maybe 10%. No, sorry, 100% dividend. No, sorry, 150% dividend. Will you believe this? That's the kind of dividend you get on your original cost for something which you've been holding for a long time. So definitely most of us will carry portfolios with a lot of overvalued portion, and in those overvalued portions the temptation is to say, let me hold on for some more time. We are all like Cinderella. We all know that at 12 o'clock the bell will ring, but at 11:55 we do not want to leave the ball because we think 4 more minutes to go, 5 more minutes to go. We do not realize that in the last minute we might want to go, but the hall could be so jam-packed that we may not find our way to the door, right? That's a problem even especially in mid-cap and small-cap overvalued stocks. And when is a good time to sell? It's always a good time to sell. It's always a good time to buy. Do not worry about a share which you bought at 30 rupees, which has gone to 60 and you're selling and you think it would go to 80. Let it go. Let somebody else on that 60 to 80 trip, right? If you bought something at 20 rupees and you think it's going to 200, then buy more at 30, buy more at 40, buy more at 50, and be very clear that something like a coronavirus or some other things will not hit it too badly, and even if it hits it too badly, you have enough capacity to sit there and wait. You have a 5-year waiting capacity or a 10-year waiting capacity. That's fine, then it's fine. But for a 10-year waiting capacity, trying to wait in the mid cap may not make too much sense because you do not know what's going to happen. And when should you sell? That's a very difficult question. I always feel you should sell when the market is rising, simply because you get a chance to sell, especially if you're doing big quantities. If you're not doing very big quantities, if you're doing 500,000, 2,000 shares, then it may not matter. But if you're doing 5 lakh, 10 lakh shares, then you need to know whether you will be able to exit very peacefully, and will your mind allow you exits at lower prices, because you've seen the price at 382. Will you like to sell it at 350, 330, 320? And that's what is likely to happen when the markets are coming down. So yes, you will have a portfolio which is overvalued in parts. You may have to book part of your profits. You may have to worry about the economy not growing well or economy growing slowly. You got to be worried about the Prime Minister doing very, very many right things in the right place without worrying about popularity. Section 370 was not popular, right? Amending Article 370 was not popular. GST was not popular. The many agricultural reforms that is taken now I called it the 1991 movement of agriculture. That's not going to be popular at all. Many states are going to oppose it. It is going to change the equations in the agri market. You might get better things at slightly higher prices, but the farmer will also get, which means a lot of things could get consumed in the village itself. It may not come to the cities, right? What is the risk for the city dweller if the farmer's standard of living goes up? He may not bring things to the city to sell. He may consume it, right? Today he's not consuming it. Even water, we are able to get it from there because maybe they don't have the buying power for water. Water is a taxed commodity. So, right, so you have to worry about all those things. Yes, similarly in your portfolio, you have to worry about the economy not doing as well, or you do not know which is the company which will do well after 5 years. So you will have overvalued portions, and those overvalued portions have to be corrected. Or you say it has always been overvalued, so I will not correct. Like real estate prices in Mumbai, they don't really fall with a big jerk or anything. They just stagnate there for a long period of time, and that's the way it falls, right? So you need to understand those things on a huge asset basis, like say HDFC, AMC. Let's take HDFC, AMC. It should not be valued so much. It is valued perhaps 5 times more than what it should be valued, or 6 times more. Is it a time to sell? Maybe. Is it a time when it will grow? You look at the P&L and you think it will grow. You look at the balance sheet and you think, oh, it's overvalued. So sometimes what happens is all the value which is in the price is going to be captured in the future growth. Should you sell? Partially, yes, maybe. If you're an original shareholder, or you're an employee and you've got the shares at a very low price and you've got a large number of shares, then obviously some portion of it has to be sold. But if you're a buyer in the market and you bought 500 shares or 1000 shares as a relative to your portfolio, it's not very significant, then you need not sell, right? So some of these things you should know, some of these things you should understand. You could have overvalued portions which have always remained overvalued, but you think the value has been captured because of the growth. In some cases, the value is in the form of dividend. In some cases, like say Reliance, the value is in terms of future growth and future splitting of the company. Maybe there will be a Reliance Jio, maybe there will be a Reliance Jio platform separately spun off, maybe there will be Reliance Retail, which could be spun off, and Reliance Jio could get listed in Nasdaq instead of getting listed here. So value could be lying in those places. So what is overvalued? Is HDFC Limited overvalued? Yes, it is overvalued if you look at it as a mortgage company. It is not at all overvalued if you look at it as a hedge fund like Berkshire Hathaway with a lot of hidden gems inside it. It is a holding company for HDFC Insurance, HDFC Mutual Fund. It still has a small stake in HDFC Bank. It has a 10% shareholding or partially sold off in Bandhan Bank, right? You need to discount all that. It has got a solid, rock solid investment portfolio. So if you have not downloaded the balance sheet and seen the portfolio, go and see the portfolio. It's complete who's who. The best Indian companies are represented there. So it's a partly like a Tata Investment Corporation share also. So it is getting discounting for all that. So you need to understand valuation. Second, you need to understand that some shares can remain valued at a higher rate always. It's like a property in Malabar Hill or Defence Colony. Places just don't fall, or Marine Drive. Places don't fall because there is limited supply. So you need to understand the valuation rather than think it is overvalued, undervalued. You don't understand valuation, that's fine. But understand that some shares can remain at an raised value for a pretty long period of time. So don't believe that these have to be sold. So understand it. That's more important than taking action. Thank you.